A very good afternoon to all the guests and speakers. So the talk is about the fintech and the transformation of pension funds and how the entire advanced technology plays an important role in this particular fund. So I hope everyone might be present, but we can start the talks, and a big round of applause for the speakers. They are all from various and veteran industries. So I really appreciate and I'm honored to be a part of this event and would love to understand more from their experience. So I would start with an introduction round. So myself, Puneet Thakkar, and we have the privilege to have 4 guests here who have a veteran experience in the fintech and the transformation of digital space and pension funds. Tanya comes from a financial modeling background. She started her own venture. She'll talk more about it. Gautam comes from a varied experience with the pension funds, modeling and calculations, and also risk involved in it. Chitro also comes from a varied industry, especially on the risk and robo-advisory field. Shiraz is from the fintech industry, and he understands fintech, and he is involved in the transformation of fintech and has played a significant role in Bahrain. And Cyril, fortunately, I know him for his brother for the last 5 years, and I worked with him in PayPal. So, and he also is a mathematician, and he has business around the fintech plus the entire pension revolution in the European space. So I would love to understand from each of the speakers here as to their expertise and how we can play an important role in this particular event. Thank you so much. Please.
Thank you. So my name is Tanya Berryman, and I head up the performance and reward management business at Intertrust, which is a listed international business. One of our key focuses being on pensions and occupational savings schemes in the workplace. I think one of the biggest challenges we have when it comes to technology and even when it comes to using technology to change the face of pensions is really how we get the youth of today interested in pensions. How do we engage with them? How do we capture their imagination? And how do we effectively get them to decide to save for their retirement? And that's one of the things that's quite close to my heart. I'm a pension trustee, primarily. That's what I've been doing over the last 18 years. And I've seen a lot around little take-up in pensions, good pensions being offered to employees and receiving only, say, a 50% take-up. And I'm very interested to hear from some of my colleagues on the panel today as to how we can change that.
Thank you so much, Tanya.
Thanks. Good afternoon. My name is Gautam. I work with a Singapore-based fintech firm called Pinbox, which is an acronym for Pension in a Box. We're basically a social enterprise and perhaps the only fintech firm worldwide which is focused on digital micro-pension inclusion. And unlike the audience that we've typically been discussing since morning, Pinbox works mainly in developing markets, in South Asia and in Africa, where we help governments to establish inclusive micro-pension programs for low-income, non-salaried, informal sector workers. And this is a population of about I think about 1.2 billion people. Most of them are below the age of 30, and most of them are currently excluded from formal pension programs. So, and basically the idea is that, most countries who are developing countries don't really have the fiscal capacity to be able to afford a meaningful, lifelong old age pension funded by tax revenues, because tax revenues are very minuscule, and the size of the pension coverage gap across the developing world is more than 90% of the workforce. So the only option that most countries really have in this area is to encourage thrift and self-help by establishing inclusive arrangements which are heavily dependent on technology. And that's where we work.
Thank you.
Thank you.
Hi, this is Chitra Mazumdar. My background is a mathematician, but almost 17 plus years I'm in the marketplace to do risk mitigation strategies for sovereign wealth fund, pension funds, and large banks. Very recently, I started my second startup. It was startup like RSRL is a startup in 2010. Now it's a full-grown company with 56 members, and all are quants. And very recently, I started AI Ethics. There is a ethical code we are programming, or we are quantifying based on the philosophy and mathematics, or rendezvous with philosophy and mathematics, how driverless car will decide in the accident-prone situation to hit to the child or old man. So lots of case studies. We are already in a prototype stage, and we would like to take to the financial industry very soon as a robo-advisor. That is our plan. Thank you.
Thank you.
Hi, my name is, the mic is not working. Hi, my name is Shah, and I am the CEO of FinTech business for AFS. AFS is a Bahraini headquartered organization. We are a FinTech player. The whole focus of our service, or the things that we do, is around making the customer's life better. And the whole purpose why I'm here is to talk about this interesting concept of how a customer who is most likely a youth, he's just entering the work industry, how would he see the savings program and personal financial management programs and the pension programs, and how would he be able or attracted to become a customer of the program and use it to the fullest, considering whatever has been going on in the industry so far. So look forward to have that chat.
Thank you so much.
Hi, I'm Cyril Ghanem, coming from a background of banking, financial services, mainly focusing on the customer experience. I'm representing here the fintech world and the startup world, since I'm working for a startup called Pixio. We're based right here in Bahrain Fintech Bay. And our entire business model is about personal data management and portability. How do we accompany the customer, the consumer, having through his data, ensuring that they are safe, that they are stored, and that he owns them back so that he can transfer and use them whenever he needs to do so. So I'm very much looking forward to this conversation with you today.
Thank you so much. And it was a great introduction about everyone. And we are really honored to understand more as to how your experience can help the particular audience and benefit the advantages of the transformation. So before this, I would like to understand the proficiency level of pension and digital transformation from the audience. If so, who all are from the pension funds, or is the entire audience from the pension fund or technology? Can everyone raise their hands? So I'll be more specific to the points. That will just help me. So everyone is from the pension funds? Pension? Perfect. So then I'll just quickly introduce about what is going on and what is the sole purpose of the FinTech Talk Show. So the major advantages of the digital or the FinTech revolution in the pension funds is basically for a customer, mainly from not only his DC fund or a DB fund, wherever he is, but mainly to tap the potential of that particular person for his particular savings. So the major intention is to understanding and from the experience as to how everyone can transform, and this particular transformation as to what it brings. So in this particular session, we will try to cover 5 or 6 topics. The major topics would be how the role of artificial intelligence or how a robo-advisor role can play an important role, what is the ethical behavior in the particular pension funds, how the DC funds can be benefited by the artificial intelligence algorithms in the future, how can you predict the future. And interestingly, this will not be only a talk, it will be more of a practical understanding as to what this particular pension funds can be benefited. And then in the last 15 minutes, we'll keep it open for the question and answers. But the major topics will be covered is as follows. The role of the individual lives, how can it be changed using technology? I think we'll start with that question later. And then the robo-advisor roles, the role of artificial intelligence, the ethical behavior, and the risk involved, or how the entire things can be monetized, but at the end there is a kind of compliance and risk aspect as well. So these are the major topics, and so I'll start with the first topic, just to set the expectations. We'll start with the basic topic as to what is going on right now and how the major lives can be changed for an individual customer or a person or an employee in a particular environment, and how a technology can really change his life. So maybe we can start with Tanya and then followed by the other audience.
Sure, thank you. So I thought I'd start with a small case study, and unfortunately it's probably going to give away my age, but back in the early 1990s, in my first job as a trainee auditor at KPMG, I had a number of trigger points that started me on my savings plan and to start a retirement savings plan right from that point. One of those was I had a degree in financial management in accounting and tax, so I understood things like time value of money and pound cost averaging and all the benefits of saving over time. I had a father who was in a 42-year career at a single employer. He had a fantastic pension, so that was a really good role model for me. And I lived in South Africa, and living in South Africa, we were keenly aware that if you didn't start saving for yourself and provide yourself with a private pension, then the likelihood of you ending up on the streets because the government was unable to be able to support us in our old age was quite strong. So all of these factors impacted on me and made me start saving for my pension straight away. So if I jump forward to today, and I try and think around the technology that would be used to replace all of those triggers, what sort of technology are we going to be using to capture the youths of today's imagination around financial awareness and understanding what it means to save just that little bit every single month? And things like gamification and the education through videos and push notifications, anything that would, I guess we all know that the youth of today are always looking at a screen. Anything that pops up on that screen that gives them that little piece of information would be really key. Something that would then take away the financial education piece that I had. You then have the idea of the 42-year single career. And today we have individuals and the young people coming through who don't stay in a career for that long and who tend to hop jobs every 2 or 3 years. And I think that technology is going to have to play a really big role in changing the way that we look at pensions and changing the nature of a pension to make them far more flexible. And a lot of that, I think, is what's going to impact on how that works in the future. But just as a challenge to some of my more fintech savvy colleagues on the panel here, today in my pension, so we were looking at 1992, we're now looking at 2018, I get a single paper-based statement that's usually 2 or 3 months out of date. It arrives by post. It tells me a little bit about my information on my pension, but not much more. There's the online access that I have is quite fragmented. It's out of date. There's nothing there that really, from a digital perspective, so many years later, that has changed and that would encourage me to save more. So I'll pass it on to my colleagues to speak to that.
So I think, Cyril, I would just quickly add this point, and that was a fantastic case study back to 1992 and now 2018, how the entire world is changing. So what is the role of youth? Because today, in this particular age, the new youth age, what is the role of a pension fund? Because there is a sentimental value. Everyone thinks that they need fast money, right? But after 10 years, they realize that they don't have a job because they are in startup, for example. So what is the role of youth in this part or in this digital transformation of pension fund?
Well, I hope the startups will last more than 10 years, but yeah. No, it's true that for youth, it sounds so far away, the pension.
Yeah.
It's a concept that makes absolute no sense. So why would they start saving from now? It's not something that they realize the potential and the importance of it. It was mentioned earlier today, the importance of education, the importance of bringing those concepts into the curriculum at early stages in college and university. Mm-hmm. So that's very important. Now, on the other side, when you start having, we are in a period of time where we have job hoppers. Young professionals are working in various companies, in various countries. The world has become a village. Communication are very simple. How do we track those individuals wherever they are? How do we make sure that we're able to know them, to follow them, to recognize what they have accumulated over time? And once they reach the pension stage, they need to be able to get these funds. It becomes very difficult by using old tools and old techniques. So the importance of new fintech solutions, identifying consumers, being able to have, for instance, all their life sitting into a wallet that they own, but everybody can reach out to this wallet, allows for fund managers, for their HR, for a lot of other industries they would work with, to be able to service them in a consistent way, in a predictable way over time.
Thank you so much. Yes, please.
Just want to expand on what Cyril said. See, we're talking about a youth, and a person who has just entered the workforce community. He's 21, 22 years old. He likes to save for his future because he has some aspirations, but he doesn't trust. And we have talked about trust in all the, I think, panels since the morning. He doesn't trust a pension fund or he doesn't trust a savings funds because he doesn't know.
Exactly.
That is where we feel that the technology can bridge that gap, right? So imagine a scenario where he has an app. On his app, he can track his portfolio. He can find out where his money is actually invested, how is it doing, not doing. If he wants to change his contribution, he can do it on the fly. And again, considering that he is a person who is hung on his WhatsApp, because we are talking about the millennial Generation Z and all those guys. So that is where he not only educates himself, which is helpful for the entire community in the longer run, but he also understands the benefit that he's getting out of any particular savings or pension plan. I think that is where the technology has a key role to play.
Absolutely.
I'll just leave it at there and then.
Thank you so much.
So, Siraj just mentioned about the micro framework, where microeconomics is playing a role. I can give you a little bit flair of the macro, like something exogenous, random variable popping up in a cloud or somewhere else, and it's coming to your system and make it disruption. So, fintech revolution can be risk mitigation, can be risk taker as well. So, we need to understand from the risk appetite point of view, and Roscoe also risk tolerance point of view. So asset allocation when we do asset allocated to the startups in Silicon Valley, you need to understand that company, how resilient that is. Sure. It's not only just statistics. Statistics means you have 10 years data, 20 years data, 100 years data. But that will not give you what is going to tomorrow, because tomorrow depends on that systemic random variable is coming to your system and make a disruption, make a huge change. So that kind of scenario, all pension funds, because I'm closely working with the asset allocation team of the pension funds and sovereign wealth fund, I could see maybe special situation today doesn't exist, because special situation means you have a huge return you are expecting and also short term. Maybe you need to understand green, or you need to invest in the renewable sources, as well as some fintech organizations can change the world. So you need to identify that. So that kind of risk culture or risk appetite system culture or risk understanding needs to be done or needs to be built up in the market.
Amazing. So this is a very interesting session, because what we come to know from the question that the look and feel, the trust factor, and a person who can predict the future based on technology with the word of mouth, and telling them that this particular things can save the future, and you can save after 10 years, you can value that this particular asset can be at a particular X%. So this is the role where technology can play. And I would love to understand from Gautam as to what was the case study which was recently developed from Pinbox, and how that transformed the life of the particular underdeveloped country.
Thank you, Puneet. So I think I'm the only person here who's not talking about salaried formal sector workers. So like I'd mentioned, that we basically work in developing countries and developing economies, and we work exclusively and only with low-income, non-salaried workers. We started this as an experiment in India in 2005. And when we rolled out micropensions, actually micropensions is a bit of a misnomer. It's really just mainstream pension products being delivered to lower income people in a smaller ticket size. So instead of saving, say, $100, can we set up a system where a person who has a lower income can save even $2 for his or her own old age without most of the savings getting eroded by high transaction costs, right? So it's like I'm a farmer and I need to buy a shampoo. And Puneet, as a businessman, also needs to buy a shampoo, but he can afford to buy a full bottle. I can't afford to buy the full bottle, but I want the same quality of shampoo. And therefore, I'm buying a sachet at $1 per sachet. And Puneet can spend $100 on buying the full bottle. So, I mean, it's really that. So, micropensions is really small ticket contributions into a mainstream pension program. And I think, so let me just give you two quick examples. One was, when we started this in India, I mean, it started in 2000, we went commercial in 2008, and by 2014, we had 2.5 million individuals who were clients who we were serving across 100 districts in 14 states in India. And these were street vendors, farmers, domestic help, and so on and so forth. And all of them were saving in the ballpark of between $3 to $5 a month. And therefore, we had to be extremely conscious of the transaction costs of achieving this outcome. And this couldn't be done in the traditional way in which finance was being sold. So in India, you had to fill up a form, a physical application form. It would get data entered. You had to provide KYC and a lot of other stuff, which increased the cost of enrolling somebody who's in a remote rural district. All we did was we created a platform and integrated with the national ID in India. So you didn't have to provide KYC anymore. You could use your biometrics or an OTP to actually get your identity verified on all your KYC details to get pulled onto a web or a mobile application where your application form was being filled up. And the transaction used to take us about 18 days of, completing the entire enrollment, from the forms getting picked up from the field and couriered and data entered and so on and so forth. This brought down the 18 days to 1.5 minutes. And there was no error at all because the data being used to fill up the application form was the data in the person's national ID itself. So we started using technology, and I have to admit, of course, that none of these things occurred to us, suo moto and just because we were very smart. Unfortunately, we also have the dubious distinction of moving from one customer to 2.5 million. We ended up with the dubious distinction of being perhaps the leading firm globally in the number of mistakes that we've made in thinking about how to design and implement pension programs for low-income people, right? And then we started thinking about how can this be then replicated, because this was not an India problem. This was the same problem in Bangladesh and in Rwanda and Kenya and so on and so forth. And we've recently, in fact, just 7-8 days ago, we've implemented a national pension scheme with the government of Rwanda for 96% of the workforce in Rwanda, which doesn't get a pension because of employment, because they're all self-employed. And that's the first. So I heard some stuff about auto-enrollments, and typically auto-enrollments are done for people in the formal sector. This, I think, is going to be the first global pension program for informal sector workers, which is based on auto-enrollments because it's national ID linked. So the government at the back end is actually opening a pension account for everybody in the population which has a national ID. All you have to do is to walk up to a cooperative or a microfinance branch or an agent of, say, MTN or a bank and just activate your account. There is no paperwork. There is no cash. You can just use your mobile wallet to make contributions. To know the account balance, you have to just give a missed call to a number. It doesn't get connected, so you're not paying for the call. But as soon as you put down the phone or the call gets disconnected, you get your balance as on that moment in your pension account. So a lot of these things are happening. And interestingly, to increase voluntary uptake and persistent participation, the government is even providing a co-contribution from the fiscal, a fiscal co-contribution in the form of saying, if you save X, then the government will put X into your pension account for a foreseeable period. So some of these things are happening, and I'm happy to say that in 8 days, more than 20,000 accounts on a soft launch have already been opened in Rwanda in this particular way, and about 40 million francs has been collected from the people in this case, and it's entirely digital.
That's a great initiative, Gautam, because this will enable the people who are actually in the developing countries, and they will think about the future for themselves. So wonderful. So further to that, probably Chitro, because I think you have a flight to catch, so I'll just try to wind up that one. But if you can just tell us, how does analytics or artificial intelligence, with an example, play an important role to predict the future of the funds? So today, in the DC funds, what we understand is there are particular funds where you invest, and you have to understand the risk versus return. So how do you predict based on an artificial intelligence model? And obviously, Tanya, you can also add because you are into financial modeling. So the role of artificial intelligence or the modeling roles for predicting the futures as to what to invest and what to not invest. So if you can just give some highlights on that.
So in principle, after 2008, we have a stagnation. We still didn't recover even in a bit from the financial crisis or whatever you say. The thing is that central banks are playing a huge role. They have a special team of financial stability. They measure the stress test. All macroeconomic fundamentals are there. The huge, like Bob Engel, who got Nobel Prize in 1993, I guess, on this financial volatility, how to predict the volatility. But I was blessed with somebody with whom I worked a bit, Mandelbrot. Mandelbrot is the father of chaos theory. If you have the turbulence in the market, in the turbulence, how to predict the scenarios. Scenario means what would be my forecast for the tomorrow, and everything is not statistics. Statistics is important. Statistical theory is important to understand the scenarios. But then you have to build the scenario analysis or scenario generations, I could say. So say, for instance, I have a product, what I'm holding. That product, future price of this product is called embedded value. And market MC is called MCEV, market consistent embedded value. So who will judge the market is consistent or not? Those central banks or like financial institutions, they will give enough data to have the feeling that where we are. So the future price of any product would actually depends on this market's consistent embedded value. And the last but not the least, the point is robo-advisor. When we talk about robo-advisor, my goal is machine learning is learning to be ethical. That ethics comes from, so machine learning is not deep learning to be intelligent only. Then everything would be, again, we'll see another, once after financial crises, due to dot-com bubble, this bubble. So artificial intelligence, this is not bubble. Only in that case where we are measuring or we are quantifying the ethical fundamentals. So robot should have, or asset manager, who is our asset manager, should have enough understanding about the future and also the prediction. Prediction is not only based on the statistics, but also the scenario analysis and everything. That's all.
Thank you so much. Yes, Tanya.
Thank you. I think one of the key challenges that's posed to me as a trustee and pension trustee is who is responsible for the financial performance of the pension and who is responsible for selecting the right investments in a pension. It's something that's quite close to my heart. I think it's very difficult. I have a degree in investment management, and I don't even want to choose the funds that I need to choose to manage my pension correctly to retirement. So how can everybody else who hasn't had the benefit of that education also make those decisions? So I think that the robo-advising side of things is going to have to develop hugely over the next few years. That, together with artificial intelligence, big data analysis, and being able to screen through all of those different characteristics and factors of the economies, and it's going to be on a worldwide scale, is going to have to hugely change and improve, I think, so that we can get the youth of today into a position where the investments that are being held for in the pensions that they're going to benefit from are being properly managed, properly governed, and that they're not having to make those small decisions around which fund to sell and which fund to buy, which is where a lot of us find ourselves today. So we've recently conducted a survey across our client base just to work out what they feel disruptive technology is going to deliver in the next few years and where they see that impacting on their businesses. And this is across quite a wide range of companies. So we're talking private individuals, normal corporate companies, banking and finance, and private equity. And we had about an equal contribution from all of those sectors. And overwhelmingly, the response has come back that artificial intelligence and blockchain are the things that are going to completely change every one of those sectors in the next 3 to 5 years. And if I go back to my earlier example, I'm still sitting having to download a form off my website to be able to change the investment selection that I have in my pension. So we have a huge leap to make in those next few years, and to encourage that youth to be able to save and choose the right investments from a robo-advice perspective. I see that having to come on in leaps and bounds, and I think people expect that.
Thank you so much. Yes. Thank you so much, Chitro. A big round of applause for Chitro. Thank you so much for your time. So further to this topic, I would like to understand and would love to understand from Shiraz and Cyril, because you always have been coaching the startups and mentoring the startups, as to the experience of the established companies, and what does the established company have to give away to the startups. So what will be the learnings for the startups from the established companies, and the employees have to actually benefit from that, because this particular world is all about startups. And I mean, I personally work in a startup, so I understand, and I have never invested in the pension fund. I have, but I mean, I would love to learn more as to the experience and from the established companies for the startups. So probably if Shiraz and Cyril, you can just share some lights and your practical experiences, please.
Yeah, sure. I think it's there has always been.
I will also invest, so I need to understand.
There has always been this debate: will startups disintermediate large companies or will disrupt them? I don't necessarily think that's the case. The startups have ideas, have products, have innovation, and have a very strong dynamic to do so. But they don't have the reach to customers. The large corporations have a P&L to run. They have some goals. They have less time to innovate and to test, try, learn, fail. All right? But they have the reach. And they have big bases of customers. So these two need to work together so that we have the best outcome out of all. Now, as a startup, how do you access these large companies?
Yes.
And actually, before getting there, the startups probably have what we call the MVP. And MVP stands for minimum viable product. And the big question is how to take this minimum viable product of a startup, MVP, into a capital block letters MVP for a company, which is the most valuable product. Okay, a company will never roll out a product which is not optimal. They cannot afford to fail, and they have to be better than competition. So the entire question is how to move from a small letter MVP into a capital letter MVP. Okay? So for the startups, it becomes very important to know which gates, how to access those large corporations, be it through the innovation departments who will be scouting for them, but has limited power and empowerment to drive the business? Or is it through the head of businesses who have their goals, which is primarily and predominantly P&L? They have to achieve their financial targets, and they have the budgets. So I'm questioning to some extent, have these companies, large corporations, have you got some shared objectives between the head of innovation scouting for startups and getting started and bringing those MVPs, small letters MVPs, and the head of business who has that objective to drive the business? All right, so this is one of the big learnings that established companies need to put in place, basically. It's an important thing. Then, I strongly doubt that one startup will solve all the problems of a company. So, large companies need to establish grounds where startups can start working together, putting together some coalitions, be coached, be driven by those large companies, so that we come to an actual most valuable product. Right? So this is the journey, how a startup can start benefiting a large corporation, and a large corporation can also benefit from startup, one or multiple startups.
Amazing. See, from my perspective, I think everyone should do what they're best in doing. So, talking about a bank, they are best in financial intermediation. If they try to go for something which is not in their core, it will be like, for example, a fantastic customer-facing app. It would be difficult for them to do the inertia would not let them do it in a period of time, and they'll lose the initiative. Similarly, for example, a savings company is good in defining, is probably best in defining a pension fund or a savings scheme or anything like that. They should focus on that. But as we are discussing, it's also about customer experience, the customer convenience. It's educating the customer, building their trust, and all the things that we just discussed. So that is where, be it a startup fintech or a established fintech, because these fintechs are nimble and they are much more agile and they are expert in their specific area of work. We are not trying to do 500 things altogether, right? We are only trying to address, for example, onboarding experience. Now, I don't feel that an insurance fund or a pension fund can design a fantastic onboarding experience, which is better than what a company who is focused on this thing only can do. So the idea is collaboration, partnerships, which will form win-win scenarios for everyone. In the end, as Puneet has been in industry for the last, X number of years, you are not a user of a pension fund. That is a signal to the market, right? The size of the pie is only as much. Yes. We need to extend it, which will help everyone. So that is where I agree with Cyril. Partnerships, collaborations is the way to go, so that everybody focuses on their areas of strength and let the other things handled by the experts in that specific area.
Learn from the best.
I had a small point on this. I think that's a great point. So even if you looked at, let's say, trying to create, let's say if you were targeting, say, the expat population, people from South Asia who are working in the GCC on short-term contracts, right? This is an extremely vulnerable population, especially the ECR population, which is, typically constructed, blue-collar guys, let's say, right? Normally, because of the informality in South Asia, in the pension space, they're all excluded from formal pension programs back home. Yeah. When they come here, they're again excluded from formal pension programs that exist here for residents, right? Yet they have a period of 4 or 5 years when they're earning 3x or 4x of the income that they were earning back home. Now, it's quite useful to think of using this additional, the higher income during this short period to leverage that, to encourage this population to say, why don't you set aside a small part of this income for your old age? And I think it's feasible to use technology. And I think to Shiraz's point, no one entity will step forward and say, I will do everything, right? Yes. Banks will say, I'm happy to do banking. Payment guys will say, I'm happy to do payments, right? But I think that's where a role for fintech could come in, where you could use technology to be the glue which brings the ecosystem together
Absolutely.
to provide a single window customer interface and a customer experience, And I think in that way, questions that we discussed in the morning on portability, let's say if I don't go back to Pakistan or Bangladesh, but I move from, say, Doha to Qatar or, to Dubai, and then what happens to my pension fund? And to your point, to the work that you do specifically, I think payments will become an absolutely integral part. Because the person has opened a pension account. I can use technology and the internet to access that account from anywhere. But I should similarly have the ability to use any payment instrument that I want, regardless of where I am in the world. And that money should, without fraud or without reconciliation errors, always hit my pension account. So I think it's feasible to use fintech in that kind of an environment.
So am I right to say RegTech, InsurTech, FinTech and Pension Tech should be connected and all the dots should be connected via middleware or something? And there are avenues for some FinTech companies to build that middleware which can connect all these 4 dots together. Because there is a lack of understanding, in this part of the world where you have a knowledge, but you are not applying that. So you have ideas, but you don't execute that. But if you can connect all these particular aspects, I think that is where the entire world should go. And this is where the future should be. So, do you think, is that right to build a kind of an interface? But there might be some kind of compliance aspects because let's take an example, the best one company in UK has the best RegTech ecosystem. But maybe a central bank or a regulator in particular part of the world, I'll not name the country, but say he doesn't have that particular regulations. So what would be the role of that particular country to connect? Because can that just be a technology? Because this is what I think everyone would love to understand, right? Because we talk about the pension funds, we talk about DC, we talk about the role of artificial intelligence, we talk about robo-advisors, and we talk about the learnings. But what about connecting all the ecosystems where you build an entire pension as a service, which has a futuristic vision of checking all the funds, but at the same time, we would definitely love to understand the risk aspects and the regulatory aspects. So what do you think would be the role of regulator? And I think it's open for all the speakers, that what would be the role of a regulator, or keeping in mind that there might be some company in one part of the world having the best fintech, some country in one part of the world having the best RegTech, and obviously there are a lot of pension funds, but how do you connect that and what regulatory aspects would play? So just a point to discuss. It's not a question, but just a point to discuss, and we are open to understand more. We just have 15 minutes, so we'll just have more 2 questions, and then we'll keep the floor open for question and answers. And we'd love to understand as to whoever wants to ask the questions.
I guess if I just say that it's quite ambitious to have a global view of this. I would say that if you had more of a country-specific view or maybe perhaps regional view, that might be more achievable. But then over time you could get them talking together, because I think the difficulty comes in with, as you mentioned, the regulation, making sure that I can imagine that blockchain is going to play a huge role in this, because there you have the security, you have the sort of disparate ledgers, you're able to track things, and you're able to shut things down when you need to as well, just with a simple key. So from a regulatory perspective and a risk management perspective, I think that's going to be very key. And on the compliance side as well. The big question that is always in the room when it comes to anything to do with technology is, what about the data privacy? What about cybersecurity? What about people hacking into these systems? And I think that is going to be very difficult to control if you had a global system. But if you had it in pockets which then spoke to each other for portability, that might work. So the
interoperability is something among the regions would play an important role, am I right? So if you talk about blockchain, for example, and there is a token generated for a blockchain which is quite secure, but there are some regulators which say blockchain is completely not allowed. But you talk about a blockchain or a cryptocurrency like Ethereum or Ripple, which can solve some of the problems connecting to banks. But in some of the regions, it is not allowed. So what issues have you faced And how can you overcome that?
I think in terms of issues, banking is a big hurdle to get over. We set up something not quite as advanced as your ID wallet that you're speaking about, but a way in which our clients could, through technology, provide all of their client due diligence information to us. And the difficulty was we were one step ahead of our regulator, who were actually in the process of sending out regulations that would allow that to happen. We were about 10 steps ahead of the banks, who were uncomfortable with the fact that this information would be stored electronically and were uncomfortable with the strength of the checking that would be done electronically and through electronic systems on the passports and things like that need to be verified. And getting over that hurdle is very difficult. And I think, once again, it's where technology needs to take that next leap, and we need to have some form of assurance and perhaps a regulation of technology to a certain extent, so that when technology is rolled out for these really sensitive pieces of parts of our economy, that you do have that regulation and you do have that feeling of control and compliance surrounded by it.
It's more of a behavioral pattern as well, I think, in the future. Because it's more of a psychological chain as well, right? Because people try to learn from the best, right? In some countries where there is the best, they try to apply. So some kind of psychological or behavioral patterns will also apply in your particular issues. Yeah.
But what I've seen is that in a lot of countries, and we worked with about a dozen regulators over the last 2 years, what we find is that regulators, as long as they are, so they're concerned about, let's say, the customer in the final analysis, right?
Customer protection and data privacy.
Absolutely. And I think these are very valid concerns.
Yeah.
And I think, to your point, as long as they get comfortable that whatever new is happening is not necessarily, it's only disruptive to the extent that it's doing new things in a new way, but it's not disruptive to the extent of, of violating any of the concerns of the regulator. I mean, I find that it might be feasible to set up a sandbox to test some of these things, to give the regulators more confidence to say, yes, this works, this is new, but it's not, it's not something that compromises, the outlook that you have or the concerns that you have. And I would think that regulators should be friendly to new ideas.
Absolutely. I think that's why we see that a lot of countries, there is a kind of a MVP created in a sandbox environment to test that how it functions. And obviously there are some mandates as to having a local data center and not having a SaaS-based servers. But I think there are ways where there is an ambitious role, but it is really coming, and we are seeing that all things are getting connected. Yeah, sorry.
No, sorry, I was actually about to say the same thing. For one, I'm a strong supporter to the regulators. I like to, and because they have a very important responsibility in this whole thing. They have a very important role, which is the stability of the financial system and the people's or the citizens' trust on that financial system. So I believe that, especially and I can talk about Bahrain because we are based here as well, I believe that the regulator in Bahrain, vis-a-vis the Central Bank of Bahrain, has been extremely, extremely helpful in terms of letting people experiment in a controlled environment. We can always talk about, cryptocurrency is not available and this and that is not available, but there is a reason behind that.
Sure.
I think in Bahrain, we are blessed with a regulator who's quite supportive to fintech, who is quite supportive to strengthening the banking environment and the adoption of latest technologies and innovation. But as with anybody else, I'm like, when a kid is born, he needs to be able to crawl first before he can run, right? If he starts to run immediately, then he'll invariably fall. And we cannot afford the financial industry to fall just like that. So I think baby steps are important, and they are being taken. And inshallah, soon, we will see that, open banking will come into this part of the world. The flow of information from one provider to another provider will be made available, and things will... so probably, I feel, my personal opinion, we are going in the right direction. Again, more collaboration is needed. A lot more confidence level has to be enhanced based on successful, controlled pilots.
Okay. So I think that really helps because, and it answers my question as well, and I think people might understand that there is a big role of regulator, and we see that there is a great support from all the regulators because they also understand that technology is evolving and we have to get the technological aspects into this particular countries, and this is how the changes are there. But obviously it cannot change in one day. Everything cannot be connected in one day. It's inshallah one day. But we see that the sandbox and the baby steps are really they are really coming into big time now. So I think we just have 5 more minutes. So I'll just end with the last question and my question, and then probably would love to understand from the audience. We had a very interesting talk called as Gift a Pension. So I think I'm going to get a gift of the pension fund from the speakers, but would love to understand as to how the youth or how would the audience or the entire world understand that a particular pension can be gifted, and what can be the benefit of this particular DC pension.
So how it started actually was just cocktail conversations about what do you do, and frankly, 70% of the people thought I've had too much to drink when I would tell them what we do. But normally what would happen is a lot of people would say, listen, this is very interesting. Can you help me open an account for pensions for my cook or for my driver, And invariably we would say, listen, we don't have a B2C model while we use technology and so on and so forth. And then it occurred to us that people like ourselves, we have, I think a lot of us have this natural sort of a tendency and a desire to do good. So there's this personal philanthropy, which I think we would all love to engage in. So what we decided was to test Gift a Pension. So we created a web-based platform which allowed you as an employer of domestic health to open a digital pension account linked to the national ID in, say, 2 to 3 minutes for your domestic health. And you don't do this for my domestic health, you just do it for yours. And our idea was that if we can use social media, not to talk to your driver, but to talk to you, and I don't do it. Tanya, who's your friend, does this, she posts on Facebook and says, listen, I've just done it, Puneet, I think you should do it too. You can actually use the power of social media to motivate people like ourselves to gift a pension to 2 or 3 or 4 people who are making a radical difference in their lives. So if my wife had to decide between my maid and me, trust me, I would be second or third in queue. So, and we found that within a few weeks of a soft launch in India, we had about 25,000-30,000 employers who had signed up, who were making contributions saying, okay, if you as my cook, you save this much, and I will also save for you in your account. And this started encouraging people. Now we are launching this in Kenya, we're expanding this in India, but we're launching this in a few other countries. And we find that this is a model that can, if 1 million people in the GCC today decide that they want to gift a pension to just one person, you could end up with 1 million pension subscribers by the weekend. And it takes 10 minutes.
Very interesting concept, because if this gift a pension can be funded by a wallet, and today I'm sitting in India, and I have, so I'm sitting in Bahrain and my cook is in India, or his family is in India, and I have a wallet in Bahrain, and I'm funding from my wallet in Bahrain for that Indian worker. That's a fantastic revolution, and this can go wonders, because today a DC fund, a worker would not know what's a DC fund. For God's sake, he will say, I really don't have money. If you want to pay me, pay my salary. But you will say, I will pay a bonus for you, other than Diwali bonus, but I'll make sure that I'll install or just add it in a wallet with some sub-accounts. That can go really good, and it can be a wonderful...
In fact, Wall Street Journal they did a large feature saying, this Diwali gift a pension to your domestic health, instead of, the usual bonus and so on and so forth.
Yeah, because the biggest challenge now is, and it's very practical today. And you rightly mentioned, I'm in Bahrain for 1 year. Next year I'm in Dubai. So my bank account changes because my CPR changes. An expat cannot stay in a country where he's not from. And then he has to go to the origin. But when he's back after 20 years, he realizes that, oh, my DC fund was in XYZ, but I really don't understand and I really don't remember. But my wallet will be linked with my bank account. So that can play a phenomenal and a significant role for a person after 20 years. Because that 20 years of money can be X% into 13%. So, amazing. Thank you so much. And I would just keep open for this 2 or 3 questions. Just 1 second.
I just have a small question about the blockchain technology and more specifically about the cryptocurrency. Do you think this is the time to consider the cryptocurrency as alternative investment, or we should wait for more regulation and other stuff? So is it the time to think about the cryptocurrency as investment, like for the DC funding, like you invest in it as alternative investment, like equity, fixed income, cryptocurrency?
Not being an investment advisor, but as a trustee, and having to have thought about this question, what do I invest in from a pension perspective? In speaking to some of my colleagues who are investment advisors and managers, the thought process at the moment for us, from a conservative trustee perspective, is not to invest in the cryptocurrency itself, but to invest in the companies that are building the technology that will deliver it in the future. Because at the moment it's too unregulated, it's too risky, and 1 minute it's up here and the next minute it's down here, and from a pension perspective it doesn't make sense.
Yeah,
please.
Yeah, I agree. So, for example, if I'm saving 200 dinars a month and I put it in a cryptocurrency which is trading at $20,000, and the next day it goes down to $5,000, I'll probably have a need of a life insurance rather than a pension fund. So probably it's not the best of the options. It's like a junk bond. There is no backing. There is no guarantee. I, for one, would probably be, if I given an opportunity, I would stay away from investing my savings into cryptocurrency unless I've won it out of some other place.
Because there are no guaranteed returns, and you have to sustain what you have saved because it's your hard-earned money. So thank you so much, everyone, and a special thanks to all the speakers, and a big round of applause. To sum up the whole conversation as to how the fintech has changed and how will it change the life of a DC pension fund is just sum up by 3 points. One is how to make the life simple for an individual, where there is a trust factor, where there is a scalability factor, and where there is a big role of influential factor. So influencing a particular person to investing is the first point. The second point is how you can predict the future using technology, using the methods of blockchain, artificial intelligence, and machine learning, clubbed with the ethical behaviors and the ethical advisor aspect. And obviously the third factor is the entire transformation has to be predicting by the use of fintech, where someone can fund in using a fintech mechanism and someone can fund out using a fintech mechanism with a single transactional ID or a single unique ID for a person. So in the future, that particular token or that ID, even after 50 years or even after 75 years, that particular person can track that entire history. Thank you so much, everyone. It was really a great session. Thank you so much. Thank you.
Ladies and gentlemen, thank you so much. This brings us to the close of the 3rd Annual Middle East and North Africa MENA Pensions Conference. We've been so pleased to have you the whole day with us. We're so grateful. And as you can see, the debate, it's a discussing pension is a long debate. It's never ending. And what distinguishes this version of MENA Pension Conference is we have the system designers, we have the regulators, we have the product producers, we have the investors, we have even the financial technologists who design and enable a future dreams and future transactions of pension, all discussing the topic of pension, which makes the experience of this pension conference so rich and profound. And I hope we have achieved the objective, and we look forward to seeing you in the future version of the MENA Pension Conference. Thank you so much.